All right, what's good, fam? So this can be like the beginning of the basic and beginners lessons to how to read structure. It can be very simple and straightforward for anybody who's interested in learning how to trade. It starts from literally the extreme basics, right? And what we're gonna do is actually just guide you straight up into understanding price action to the most advanced level possible for what it is, down to the intricacies and everything else. But we're starting from the literal basics, like what is a candlestick, understanding how highs are, how lows are, how they're created, how supply and demand actually works, and then you'll be able to add things on later on. But this is the simplest way to get you to understand how things are working and how you can get yourself involved in it right now. Hopefully you guys enjoy the videos. Yeah, this is just another form of value that I can bring to you guys. Pick up yourself. Peace. Alright folks, what's good? I'm gonna try to make these videos very short and precise and very informative as possible. So what's a candlestick? You're gonna be seeing this a lot. This is a candlestick. This is a representation of the movement of price. Very simply put, if I can just tell you just like that, that's just what it is. Now I want you to understand a few things. There are four main parts of a candlestick. Knowing this will help you understand like what the movement of price did, so that you can understand how you want to get into the trades, right? So those are the four main parts. So this right here is the literal high of the price, that of wherever price moved, the highest it went. This right here would be, in a bullish candle at least, this would be the close. This one right here would be the open, and then this one right here would be the low. Very simply put, right? So, and if I flip this, like if I just invert the scale and it was a bearish candle, like if there was a red one, so picture this being red as in a down candle, that would have been the low, the high that it created, and this would have been the extreme low that it went to. This is where price came back up and closed, and then this is where it opened from, right? So you'd have something like this. If I could just copy these right here, and exclude this one, then I'd be able to do this. And let's just say candlestick formation was like this. This would have been the previous down candle, and then the next one that opened. As you can see, this is the open, right? This is the open, and then this is the high. This would be the high from the down candle, and then this is where it closed. This is where the lowest that it went, right? So let me invert it back. High, close, open, low for bullish, right? Because if this was green and green, then simply put, what we're doing is saying, okay, price pushed up, highest that it pushed up, came back down, closed right here. The next candle opened right here, came down, created a low, pushed all the way up. The highest that it went to was this, and then it came back down and closed right here. Simple live example. Here is that right here. This is just a random thing. This is NAS right now. As you can see, the same thing. Price pushed up. Don't mind the fact that they're all white. I can just do this for you real quick, right? So price pushed up, came back down, closed, opened, came down here and pushed all the way up and closed right at the highest point, opened, and repeated the same cycle. That's what price did, and that's how price moves. That's what candlesticks are. Now, a candlestick is represented by time frames. So what do I mean by that? Simply put, if I say to you now, hey, each one of these candlesticks is a representation of the time frame that you choose, it's very simply put and forward. If I say this is a 15-minute chart, bam, every one of these is a representation of 15 minutes, 15 minutes, 15 minutes. Look down here, you see the time. Everyone is 15, so that's 11:15. This is 11:30. This is 11:45, 12, and so on and so forth. If I go to 1 hour, Each one of these is a representation of 1 hour. So what happened in 1 hour each, right? Very simply put, 1 day. These are daily candles. They're all doing the exact same thing. They're pushing up, doing the same thing. It's just different time intervals, right? It's very simple and straightforward. Whether the week, whether the month, whether the 1 second, whether the 5 second, it's all the same, right? You have highs, lows, opens, and it repeats itself on repeat, right? That's the very basics of what a candlestick is and how to look on it in terms of time representation. On the 1 minute, this is what it looks like, the exact same thing. So then every minute, as you can see, this is a live market. Every minute, there's one being printed. If I go to the 5 minute, every 5 minutes, there's one being printed. Every 10 minutes, there's one being printed. Every 30 minutes, there's one being printed, right? And you get to see the representation of what that looks like and what that is. That's the basics of what a candlestick is. Cool. See you in the next one. Alrighty, so welcome back. To make this very simple, you have to understand 2 things now from here. I just showed you exactly what candlesticks are, how to represent them through time, and what they do represent based on whatever time frame you're looking at. Right now, the simplicity of what we're going to look at is what supply and demand is. What does a down candle represent? And an up candle represents, right? Very simply put, what do these 2 things represent? This one here simply represents, a down candle represents supply. By supply, I can use real world situations so you can understand this. Supply, and then an up candle represents demand. Very simply put, right? So what we're trading is supply and demand. So you have to understand this. If there is a demand for something, as you can use common sense and say, if there's a demand for something and you see the price going up, then that means there is demand for it, right? So again, like I said, the real world asset I can say now is like iPhones, right? Every time there's a new iPhone that comes out, there's a demand for it, so the price goes up. So the price goes up. Now, what happens if Apple makes a whole lot of phones and they're not selling? Then what typically happens is they have a lot of supply that they can't get rid of. So in order to get rid of it, they have to sell it at a discounted price. So price has to go down, right? Has to go down. Then once demand comes back in, let's just say they come out with a new device, some Oculus 55 billion, blah, 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 0.346, whatever the name is. And now they have a huge demand for it. This now will drive their stock or drive the prices back up once again and create new highs and create new lows. And that's how the market cycle works. So essentially it's a swing up, a swing down, and hopefully it can go back up through these where the price was last. So it's just supply and demand. That's all we're doing. Remember, so up is a demand candle, down is a supply candle. That's very straightforward. You don't need anything extra than that. Now, then we can get into trends. So now you can understand based on what this is, that an up candle, a down candle represents supply. This is a supply chain right here, right? Doesn't matter the time frame, that's just what it is. So in other words, I'll show you right here. These are down candles right here, going down, as you can see. Yes, I have all my charts like this, so let me actually put it green and red so it can be a live representation. All right, so as you can see in the live charts, these are live charts. There are red candles coming down here, a demand candle, supply candle, demand candle. So price is fighting right here, and then you see more supply candles than you see demand. All right, then you see a lot of demand coming in from right here, buying up, pushing down, buying up, right? And it's going up way more. So this is a huge demand candle, right? But essentially what you need to understand is that this is just what's happening in the market over and over on whatever time frame. This is the 1 minute we're looking at. If I go to the daily, it's the same thing. Remember the time representation. So this is 1 day, 2 days, 3 days, 4 days, 5 days, 6 days, you know, and you can kind of see exactly how that works. If it's the monthly, it's all the same. The monthly candles are doing the exact same thing, right? Each month is represented by a different candle. Down to the 5 second, it's the exact same thing. So it's just a fractal market thing happening. This is live price right now. As you can see, price is moving and creating these supply and demand zones. Like this is a supply candle being created right now. Let's see what's created next. Another supply candle, then, you know, and it just continues in that fashion, whichever direction price is going, right? That's the easiest way for me to put that to you for what I'm representing up here. Yeah, here we are. So again, this is down candles represent supply, up candles represent demand, as you can see. And that's just pretty much what this is. Now, in terms of how you can understand where you want to buy or sell from, you have to identify what we call a trend, and that's going to be in the next video. Alrighty, beautiful. So you survived those 2 videos already. You're on a good start. It's a good understanding to have. And yeah, let's just see if you can keep that up, you see. All right, so what we're going to look at right now is what makes up a trend. So I want you to understand this. Remember, I showed you in the very first video how you have the open of the candle, the high, the low, and those kind of stuff. The very low of the market would be like right here, right? That would be the lowest point that it made so far before pushing up right here, right? And this is the highest part of the market that it made, right? Don't forget these right here, but yeah, this is the highest point of the market so far that it created. I want you to understand something. This right here is your high. So where bullish liquidity is, I'll tell you what liquidity is right now. And then your bearish liquidity is down there. For this instance, I'll put this red so you can understand that. By liquidity, it simply means, and this is how trends are made. By liquidity, it simply means there are people up here selling the market, which means they put their stop losses up here, and this is where they're selling from, because that's what created the supply anyways. You had to have sellers here that pushed the market down, just like how you had to have buyers here that pushed the market up. You had to have sellers here that pushed the market down. You have to have buyers here that's pushing the market up. So that's what liquidity pretty much is, right? So in vice versa, you have a lot of people down here with stop losses here as well, but these stop losses now are on the bullish side, right? So you have buyers and sellers in the market all over, like it's every single where, as you can obviously see, right? You have people buying here, you have people selling here, you have people buying here, and then they get trapped because now there's a big sell off. So people's stop losses were under here who are buying, and then you have people's stop losses right here who are selling, right? So people who are buying here were pushing that up, and then people were selling up here, which is why it pushed down so heavy, right? So now these are just visual representations. Again, this is a lot of people's stop losses right here that are buying. This is a lot of people's this is a lot of people's stop losses who are selling. And as you can see, price came and stopped these people out, took liquidity, in other words, took their money. And then people who are up here who had their stop losses, price came and took their money. So it took both sides of the market, and that's, you see, that's why it's such a tricky thing. So once you understand that, then you'll get to see what's going on. So let me show you something really cool here. This is how a trend will work. If it's an uptrend, if I copy this and simply do this, then what will you see? You'll realize really quickly that we just took these highs, which means these people's stop losses got taken, which means people who were selling lost their money. That's what that means. And if I do that again, so let's say I grabbed these and I do that again, then what happens? Did I select that? Okay, no. If I do this again, then you can see where we are in an uptrend, right? Because the price, the lows are not being taken. Only the highs are being traded through, right? So where people are putting their stop losses on repeat, up here and up here, they're getting destroyed each time that they put their stop losses up here to sell, because the trend in the market right now, as you can see even by this example right here, is moving like this. All right, is moving higher and higher. In a trend, in a bullish trend, you will have it where the lows are not traded through, represented in red, and then you'll have it where price is crossing the highs, crossing the highs in a bullish market, because it's trending upwards. So this is a video for trending, right? It's trending upward. This is how you can easily identify what a trend looks like and if a market is trending, because you'll see that the price is taking the highs. Or if I invert this right now, you'll see that price would be taking the lows if it sells, as you can see. You see, so anybody who's buying down here would get taken. Anybody buying down here is likely to be taken, right? Same thing, and I'll show you that on the charts right now. Here it is again. So in a bullish market, again, same thing. Price is pushing up, which means it does not want to go for the lows. It doesn't matter the time frame. Don't look on the time frame. It really doesn't matter. This is a low, right? That is pushing bullish, right? This is a low that is pushing bullish. 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 Same characteristics. As you can see, we do not cross the lows. We only cross the highs, and so on and so forth in a bullish market. If I invert this, it's the same thing. Going for sells, where people's stop losses now become up here, god damn, up here, all right? But you have to identify what the trend is first before you can get into these type of markets, right? Very simply put, let's ask yourself, the key thing here is to ask yourself, is price breaking highs or lows? And once you ask yourself that, and you can easily look on any chart and identify that, then you'll be able to get into any trade. Because now you can position yourself when you see a pullback for continuation trades to go upward or down, whatever the case may be. But now you understand that, right? Simply put, now you understand exactly what I was trying to show you right here, right? Very simply put, in a bullish market, you're going to have price where it's pushing up, pulling back. So this right here is a pullback. Understand this. Because trends, this is the video on trends, right? So pullback. This right here is a representation of a pullback. This right here, this leg, which is the same leg as this one right here, right? So what I'll do, I can't do that singly. What I'll do is this, right? This is your pullback leg. I'll make that red. Yeah, you can't really see it too good. That's fine. So this is your pullback. I'll show you like this. This is your pullback leg. This is your pullback leg. This is your pullback leg. As you can see, in the charts, it'd be this pullback leg, pullback, pullback. You can see that, right? So it's very simple. Now this one, As you can see, this is pullback, pullback, pullback. Now, this one right here, this leg right here is called your continuation leg, right? This is your continuation leg. I'll just call it continuation. So continuation, continuation, and continuation. And this is how trends sustain themselves. Continuation looks like this. Continuation, continuation, continuation. What does that look like over here? Continuation, going to break the highs, pull back, as you see, pull back, continuation, going to break the highs in a bullish market, pull back, doesn't break the lows, continuation is what you're anticipating. That's what we're doing here, over and over on repeat. You understand that? This is all it is, and you don't have to complicate anything. You don't need any indicators for it or anything like that. But what, you know what I mean? You don't need any indicators for that. It's very simple put, and that's just what it is. So remember now, if I show you that in the market, any point really, let me find a nice easy representative of what I'm saying right now. Great. So here it is. You have a push, a pullback. So see, you have a push, a pullback, and the continuation. A pullback and a continuation. A deeper pullback and a continuation, right? That is what the market just did. And if you understand it, low, high, low, lower low, high, lower low, higher high, inducing people to fool them into starting to think that the trend has changed, but goes back and takes the lower low and continues in that bearish trend, right? Here it is. Same representation as I showed you up by the top. This is where people's stop losses are for sells. For sells, they got stopped out right here, but the continuation for sells continues, right? This is the same motion, everything else. And remember now, taking the lows, the easiest way for you to know if you're bullish or bearish. Again, you ask yourself, are we breaking highs or breaking lows? This one here broke the high, yes, but we came back and started to break the low. So now you continue back bearish. Simple as that. There's nothing more about trends that you need to understand. Okay, in a bearish market, that was the bearish one. Let me show you a bullish market. Very easy put. Here it is. Low, high, low, high, low, high. And you just continue in the same bullish market until it starts to break down, right? As you can see, it starts to break down and start breaking lows. But that's the representation. And in that same market, in the representation of that same big structure, you have the same mini things happening in here, which we'll get into that because this is the way more advanced part of it, right? This is a little bit more advanced, the mini breaks in here and whatever it is. But this is what you're leading up to, right? To understand how markets actually work, because you have inner structure and you have outer structure, like the bigger structure. Because if I zoom out right here, I can easily say, all right, high, low, the highest point next is right here. The lower point that came and broke that right there. Highest point right there. Lowest point right here, and so on and so forth. All right, you can, it's easy for you to identify it. And what are you doing? Breaking lows, not breaking highs, as you can see, right? So that's the bearish one. And then a big bullish one, you can say easily. Low, high, low. And you're looking for that continuation to go up. So hopefully you understood that now too. This is how trends are created, sustained, and this is just how they work, right? I believe you definitely understand this part right now. So again, you ask yourself, as soon as you get on price, as soon as you get on the charts, is price breaking highs or lows? And if you answer that, then you know exactly what your direction is. Now from here, the next episode now is going to be about how you would enter to get into the market now, and what we would be waiting on to do that. What we're going to do is clean this up a bit and then show you how we would get involved in the market. All right, and see how we would enter the markets. Very simply put. All right, so based on this pullbacks, continuations, and all these extra stuff, I'm going to use this right here as a perfect example to show you how and where we would enter the market. So you have a bullish market. How do you know that you're bullish? You are breaking highs. Remember, you ask yourself all the time, are we breaking highs or breaking lows? Right? So what I'm going to do is redraw this simple part right here. So coming up, we did this and we broke down right here. Your first indication is the fact that we broke the high. From we broke the high, what you're going to be doing is waiting for a pullback. You need a pullback, whether to a zone or whatever the case is, but you need a pullback because you don't want to enter into the high right here, and you don't want to look for a trade while it's going up higher, because the likelihood of price doing something like this and then stopping you out over and over and just looking retarded is very likely to happen up here in these regions right here. All right, versus you looking for a trade around these parts, right, around that section right there. So you kind of want price to pull back, re-enter a zone here, or when we get to that point of looking for MAs and such, but we're not there yet. But you want price to essentially enter a zone, or enter into, or just pull back from the high, leaving a high up there that wants to be ran on to continue the bullish market, right? So you wait for a pullback. Within this pullback right here is where you're now going to scale down to a lower time frame to look for the exact same things happening, which is price pushing up and breaking highs and breaking highs. That's it, to continue this motion right here. Because in this, you see one line right now, me doing that, but within this, let's just say this is the whatever time frame. On a lower time frame, this is what's happening here. This is what's happening, right? You have a lot of price action. Then when you see it pulling back like this is when you want to get involved, when it starts to do this, right? And get in on these highs right here, because it's the same thing as you trading through these highs right here, right? Nothing's changed. You're trading through the highs. You're trading through the highs. But essentially, you want to get in on the highs down in the lower time frames in here. For what? For continuation. Hear my belly, man. For continuations. Because you want to be a trend following trader, right? So continuation. Remember in the last episode, continuation. This is the pullback. This right here, if I put this, this right here is your pullback. This is not where you want to get in from. You want to get in on your pullback when it starts to, so see your pullback again here. You want to get in on the continuation portion of it, right? That's essentially what you're looking for. Hopefully I didn't confuse that too tough, right? So you want to get in on the continuation leg. You want to get in on the continuation leg. Come on, bro. You want to get in on the continuation leg, not the pullback leg. The pullback leg is not what you want to get in on. That's what you want to see happen, which is this. You want to see the pullback first. Then when you start to see price breaking highs within the continuation is when you want to do that. How does that look? So let me just find live price right now, because price is live right now. This is an ugly market, so I won't use that part right there. But let's just use bar replay, I guess. So what we can see is price push up. What we can see is that price pushed up, down, breaking highs, breaking highs, breaking highs. So on a pullback that continues going up, we want to see that we can get in somewhere down here, right? That's what essentially what we're looking for. We want to get involved somewhere down here so that we can get in, right? So I mark this off and I say, okay, this is on a 5-minute chart right now. If I go down to the 1-minute chart, what do I see? Right? So if I do this and I go like this and I do 2 charts and I do the 5-minute over here and I do this, I don't want to confuse you, so I'm gonna save this as green red, and then I do this as green red, and we're down in here, right? Same thing. Let me take off this indicator. Bam, same place, the same place, and I go down to the 1 minute. I'll show you something, or even down to the 30-second, and I'll just show you something. All right. Do you see the same circle? The red circle is the same representation of the same red circle. This is where we're currently at on the 30-second time frame. This is the 5-minute time frame over here. So on the 30-second time frame, tell me what you see, and if it's not the same thing that I just showed you. Look at this: high, low, high, low. As you see the same representations of the same thing happening. All right? Bullish structure happening on repeat, going straight up. Look at it over here on the 5-minute. Tell me if this is not bullish structure. All right? It's the same thing happening in here on a lower time frame, going upward. So your entry now, again, if you were just using the 5-minute and the 30-second, you know that you're bullish because you're breaking highs. So remember, you ask yourself, are we breaking highs or lows? And right here, you easily see that you're breaking highs. So therefore, in all of these areas right here, you're looking to get involved on the lower time frame to buy, right? All of these areas right here, you're looking for areas to buy from, right? This is just the area that continued, right? It's really intricate, but it's very simple. So look at it like this: through each high. So if you pay attention over this side, through each high, this is how you're gonna buy or sell, whatever. You're gonna buy through the high. You're gonna buy through that line. You're gonna buy through that line. You're gonna buy through this line. Whenever it crosses the high is when you're gonna buy. Cross the high, buy. Yes, sir. So you'd buy right there, and your stop loss would go right below the low that it created. Very simple put, right? And you're looking for that continuation trade on the higher time frame. So all of these were buy opportunities. If I get down in here, remember the same 30-second time frame versus the 5-minute. The 5-minute is pushing, breaking highs, blah, blah, blah. It pulls back. Look at these highs here that you could have traded through. So let me do this. These are, sorry, I have a cough. That's a high that you trade through. Here's the low. That's a high that you trade through. Here's the low. High, high. See, same thing on repeat. This is a new high that's being created and is only traded through right there. So that is there. The low is right here. And you realize that this, you just be on repeat, rinsing this market out on repeat. Look at these different highs. Look at all of these. All right. Just in a bullish market. Remember, in a bullish market, you literally have, uptrend moving. Therefore, all of these right here, you could have gotten in right here on this instance right here. As soon as it crossed that high, your stop loss goes below the low that was created. See, high, low, and gone. All right. Simple as that. And you would have been able to capitalize off of this market, because remember, your 5-minute over here, you're aiming for the highs to be traded through, and for what? The continuation. Don't forget, this is what we're doing over here. Oh, it's up here. Don't forget, this is what we're doing over here. You're trading through here for the continuation to create a higher high, pull back, and create another higher high. Therefore, you wouldn't expect price to just come up here and stop and come back down. You want to see price trade through that to continue what? The bullish motion. And if I continue and play price, this is just what we're seeing. This is the pullback now. See, pull back. And now look at these continuations. Look at this. So you see, pushing up again, breaking highs, breaking highs. This one breaks the low, but doesn't break that low. Comes back and breaks the highs. You're continuing in the bullish momentum, right? So let's just see what happens. Here we go. Price continues pushing higher. Why? Because we're in a bullish market, as you can see. Look at how this thing behaves. So you can hold this thing and keep going until you see a deeper pullback on the 5 minute. But as you see, this was a pullback, and you could have gotten involved here, right? Or here. But look at all the highs being broken. Ask yourself, are we breaking highs or lows? You're breaking highs, okay, get in for a buy. You're breaking lows, okay, get in for a sell, right? If I inverted this again, it'd be the same thing like if you were selling. If I inverted this, it'd be the same thing as if you were selling. Nothing's different. You would have gotten in right here on the sell, waiting for it to break the low and continue going down, right? To ride the wave. Very simple put. Hopefully you understand that now. This was a longer video, but I know super valuable because then you understand how the trends actually work and how it's represented, right? Right. And this, sometimes price will go absolutely berserk and then shoot up or shoot down or whatever it is. And you're able then now to capitalize on these moves, right? Very simply put. And you see, continuing going up. That's the pullback right now, only to continue and keep going higher and higher and higher and higher and higher. So as you see, even in this, holding this trade, because then you could have used a higher time frame. Let's say this is the 5 minute, remember? Let's just say you used a 1 hour to kind of predict this. On the 1 hour, you see also that you're breaking highs. Ask yourself all the time, are we breaking highs or lows? The 1 hour is breaking highs. We got in right here close enough to the 1 hour high, but we were expecting what? Continuation. Why? Because it's a bullish market, right? Because you see it breaking highs. Don't worry about looking back and all of this stuff. This is completely irrelevant to what's currently happening. Even though you see this is as a downtrend, right? To what's currently happening, you see prices continuously breaking highs right here. So follow it. Follow it. Let's see what it does. Just follow price. You can't go wrong following price, right? I think this is where live market is right now, actually. Yeah, this is where live market is. So yeah, based on the hourly right now, price is just dancing right here. There's nothing to do, right? Because it's not trending at the moment. Price is not trending at the moment, as you can see, right? Yeah, price is not trending at the moment. It's just chilling in this area right here. So a lot of people are losing money in here because there are what? Stop losses under here and stop losses above here. So right now, more than likely, price can do some stupidness like this. Wipe these people out, wipe these people out, wipe these people out, and just keep on dancing around and doing stupidness, right? And that's how people get caught in the market over and over. Hopefully you found this one valuable. I'll show you how you can even make it easier for yourself using one simple indicator. Only one indicator. And it's not Primora, it's not my indicator. It's an indicator that I use within Primora, that anybody can be able to use it to identify the trend even easier. All right, cool, peace. Alrighty folks, so the last part of this lesson right here, the last thing that you're gonna need, as you understand now what candlesticks look like, what they do, how they operate, what they represent in terms of time, and what they are in terms of demand and supply, and what you're waiting for to identify also now what a trend looks like when it's going up or when it's going down. All right, you now understand these things. The last thing for you to do now is to add something here as confluence that helps you navigate whether or not you want to, or helps you to look for a specific thing. And that, for me, that makes it easier, is a smooth moving average. It's very specific, right? Because you have different types of averages. You have the regular moving average, you have the simple moving average, exponential moving average, whatever it is. But the smooth moving average is just what I personally use. As you can see, depending on the length that you have, it will rub against price because it's a moving average, the moving average of price. So if you say 7, then it's judging this based on the last 7 candles. If I put this to 50, now it'll map based on the last 50 candles. Whatever number I put this at, could be 200, it'll be the last 200 candles, right? So here's how you use the moving average. You use the moving average to say, okay, very simply put, 2 ways to use it. If price is above the MAs, buy. If price is below the MAs, you guessed it, sell. Simple. So now that you see price above the MAs, what's your next job? Your next job, okay, price is above the MAs. You're going to create a checklist for yourself, right? Checklist. Is price above or below the MAs? Once you answer that, you're on to the next thing. All right. 1. Is price above or below the MAs? 2. Are we breaking highs or lows? Once you answer those 2 things, you're literally good to go. Then now what you're going to look for, how to enter. What I wait for to enter. That's it. Pull back. Signs of continuation. So very simple put, you create your checklist. Your checklist is here. You ask yourself, first of all, is price above or below the MAs? Right? Oh, okay, it's above. Okay, so then I'm only looking for buys. Great. I know that I'm only looking for buys because guess what? If price is above the MAs, buy. If price is below the MAs, sell. But it's not just, oh, it's below the MAs, let me just sell right now. You have to have the criteria. You have to have the checklist. So is price above or below the MAs? Okay, right here, based on this section right here that we're going to be looking at, right? We are above. So we're going to buy. Are we breaking highs or lows? Well, based on what I'm seeing, I see that we're breaking highs. Okay, we're breaking highs. We're breaking highs. All right, cool. All right. I see this. It's obvious, quite obvious. Even though it does stuff like this, it continues breaking highs. So I'm looking for buys, right? And it's above my MAs. Okay, are we breaking highs or lows? We're breaking highs. So what should I wait for to enter? Number 1, like I told you, you wait for the pullback. All of these areas that pull back are the areas for you to then look for what? The next thing, signs of continuation, which means what? Breaking highs and lows on what? The lower time frame. So based on the 1 hour, when this pulled back, let me delete this now. As you can clearly see now, right? Structure. In here, it starts to look choppy and you start to be like, oh, well, what is it doing here? Da, 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 da. That's fine. That's just how price will work. And this is how you end up taking some losses. Because, you know, the last video that I can post now would be psychology to say you do take losses and you can't escape that no matter what strategy, no matter what understanding of the market you have. Because the whole game is about probability. But again, in terms of pullbacks, look at this pullback. Look at this pullback. Look at this pullback. Look at this pullback. Hopefully it's starting to become clear to you. This is sideways action wanting to appear as a pullback. And you have to understand the difference between that. Look at how these things are oval shaped, pointing in a direction. This one here is sideways. That's not a pullback. This is a pullback, right? As you can see. So, and obviously this whole thing right here is a pullback. Signs of continuation would be you going down into this price action, like on the 5 minute or in the 1 minute, whatever time frames you choose, and you'll see price breaking highs and breaking highs in here. And that's how you get to continue, because your higher time frame, which is your 1 hour in this case, is already breaking highs, right? So I don't want to confuse you. I want to keep it simple. So when you see price doing a pullback, remember you have your checklist. When you see price doing a pullback, this is all you need to see. And then all you're doing is waiting for it to go back bullish. To do what? Trade through the highs. Trade through the highs. Trade through the highs. Through the highs. Through the highs. Through the highs. As you can see, the pullback, then continuation. Pullback, continuation. Pullback, continuation. You would be somewhere positioned down in here to take the ride back out. Pullback, continuation. You'd be positioned somewhere down in here to trade that back out. That's it. You'd be positioned somewhere in here for this high. You'd be positioned somewhere in here for this one, somewhere in here. This one sideways market, so maybe not. This one here kind of sideways too, so maybe not. This one pullback, somewhere in here you're positioned. Somewhere in here you're positioned. Somewhere in here. I know this is being super clear to somebody right now. And then based on this, you were getting ready for it to go and take the high, but then you started breaking lows. And what you're doing, you get back to your checklist. Is price above or below the MAs? Okay, we're still above. So what am I waiting for? Even though I see it breaking lows, I'm waiting for it to start back breaking highs. As you can see, because I'm above my MA. This one here is done the 200 MA. So you could be choosing whatever you want. It could have been the 50, right? On the 50, you'd have been looking for sells here now too, right? Because you start to see that you're breaking lows, and now you start look for a sell. So you can shape this whatever you want to shape it as. I'll just leave it in this example as a 200. You start back breaking highs, as you can see. High, low, high, low. And you start back breaking highs. So now you're starting to look back for the same thing. So, like, I know for a fact it's super easy for somebody right now. You're seeing this like, oh, it's magic. No, it's not. It's just the same thing on repeat. See? Look at all these different highs being broken and stuff. Like, you're above the MAs, just continue looking for highs. And then for the bearish part, here it is. You're below the market. Just start to look for the lows to be broken. You see the lows being broken. See the lows being broken? See them there? See all of these lows being broken? All of these lows. Even this long period of waiting, it still came back and broke the low. You see? And then continued going way lower. And this is how you can stay into a trend for a very long time. All right? This is how you stay into a trend for a very long time and actually maximize what you can do. And this is the course. Very simple. Now you kind of understand what you're looking for and what you can look for and use. It's very simple put. Hopefully you found value in this. Watch the videos over and over and over again, and you'll be able to maximize from the charts and stuff. So I get back to my original settings. I like to view things. Let me just show you something in my peripherals. I have my indicator, of course, Primora, which I use to help me identify the exact same things. The exact same things that I just told you. I use it to identify the exact same things. All right, so these lines is where that's a high that wanted to be crossed, because I knew that we were bullish, bam, bam, bam. So I would trade through this high right here because I see the line pop up. I'm there in that trade, right? Boom, I'm just there already. In this area, when I saw that pullback, I typically would wait till I see a pullback to my MAs. And then once I see the pullback to my MA, then I get involved. Like I said, it can get very intricate, but of course, this is a free version for you to get to really start to make some money right now. This is a pullback right in here. if I get to the 2 screens and I get back the same way like I was showing you, scalp guard, bridle, and I get down to the 5 minute, this area is right here. This is that area, same area. If I turn on the indicator, what do you see? I see the high right here being crossed. And look on the 1 hour, same place right in here. So I would have seen this top the MA, come back up, give me my signal. I would have been in right here, stop loss below the low, and I'm leaving it for what? Continuation. Now I have my own management rules and my own management, how I want to do that, because trade management is a whole other thing. There's so much for you to learn, but one step at a time. This is how you get into the market, you know. Yeah, and then you can obviously manage from the higher time frames, like the 1 hour. If it closes below the MA, you can close out. So like right there, I think it closed right there. As you can even see live right now, it's creating the different plots for me to take. I call these plots, right? But yeah, did it close below the MA yet? It hasn't. So as soon as it closed below the MA, that's where I would come up. Very simple put. So this one would have been running at a 1 to 9 already so far. Yeah, so it's very simple. You understand that. Now you can go ahead and use, you know, utilize what I done taught you and try to see if you can make full sense of it. You see, I'm using the same things, but this one here, I'm using the 10 MA, right? So there's so much things that you can tweak with. There's so much things that you can tweak with this indicator here, like where you'd want the plots to pop up. Like if I chose 20 right now, it would change the different areas, like this one right here. So it popped up right here instead. If I chose 3, I would still have that one, but I would have more plots, you know. You have sessions in here, and you have different pieces of information that makes it really valuable for you, like the time frames, whether you're bullish or bearish up here. It shows all those different things. I don't mean to sell you on this, but this is just what it is. After you're doing it for a while and you create your own tools, you kind of make it easier for yourself, obviously. So you can utilize all the things that I done showed you just a while ago. And then when you're ready to step up or level up to what you want to do, you can obviously come over, join the WhatsApp group. This one here is free for sure. I'll leave the link in the description, and then you'll be able to join that and be a part of people that are like-minded. Very simply put. So peace. Glad you found some value in it. Yeah, rewatch the course a couple times so you can kind of see exactly what you want to do, and then yeah, we can make some money together. Big up yourself. Peace.